Welcome to the last leg of this edition of the Nation Leadership Forum, where we are looking at the digital payments landscape in this country. Part 1 was largely on COVID and digital payments. Part 2 was on the policy framework. Now I want to take a lot of your feedback and see what the panelists have to say. Let me start with this question, which has been fielded by very many viewers. We cannot have a conversation about digital payments and not talk about cryptocurrency. Mr. Ali, let me start off with you. What are your thoughts on this?
Yes, Julian. So, it's good that I'm not Elon Musk, because if I gave a negative view on the crypto, the value would drop. So no worries to crypto holders. But crypto is, you see, there's a difference between when you can use a currency for transaction and commerce versus when you use it as an asset class. And to me, things like Ethereum, Bitcoin, they are asset classes where, recently Elon Musk came on TV and did a show and the price dropped. So if I'm buying a shoe for that with that cryptocurrency and let's say it cost me $5, and then the very next second that goes up to $50 or goes down to $1, that's not really a stable currency you can bank on. So I think we are looking at models of stable coins which are backed by governments and they are regulated, and I think those can be perhaps in a better way used for commerce. But the way the current Bitcoin and some of the other currencies are being used, it is best to use it as an asset class for investment. But hey, I mean, if you feel up for it, feel free, knock yourself out. I wouldn't do so. But I think again the differentiation here is there is the cryptocurrency, and then there is of course blockchain. Now blockchain is a technology, right? And there are lots of good uses for it. So I don't want the audience to take away that there's something wrong with blockchain. Blockchain can be used for proof of provenance, to find out where a particular, for example, diamond was started its journey and how it reached to a shop in Dubai or in Nairobi. There are many good use cases for that. Yeah.
Right, many thanks for those thoughts, and I should just remind viewers that Kenya had a whole task force looking at how we can leverage the blockchain technology in some of our payment systems in this country, and I think the report was tabled in the National Assembly. But let me get some quick thoughts from Professor Tia Waris on the same before I go to another question from a viewer.
So when we talk about crypto, we always talk about the value of the cryptocurrency, but let's talk about how much electricity it takes to actually produce one of those coins and how many months and months of computer activity it takes. And if you're going to try and look at inclusion of more and more of the informal sector into an economy, this is just one more way of creating a bigger disparity. This is wealth that is earned because you have a computer and access to electricity, and you can actually start churning out these the coins. On the other hand, you could be speculative and you have capital, and then you can now speculate on the value of it. I have a problem with cryptocurrencies because they actually destroy the economic system and the stability of the economic system in which you're working. And if you allow them to continue, they can cause a lot of problems. I mean, cryptocurrencies actually started as being illicit currencies used by people who were money launderers and drug dealers because they were looking for ways to exchange their goods using currencies that wouldn't be detected and online. And slowly this is becoming more formalized and accepted, but it is still extremely problematic, and it's a huge part of cryptocurrencies. So I'm very wary of them. I mean, I agree about the issue of blockchain being important, and actually from a tax perspective, blockchain actually allows you to see the different tax points at which you can actually pay taxes. Yeah.
Let me hold Professor Tia Waris on that, and we shall keep it at that. Let's move on to another question. Dr. Habil, there's a question around digital payments and what digital services tax actually means for the efforts to try and widen this inclusion. What are your thoughts, Dr. Habil?
Yeah, but maybe, Julian, just before I come to that question about the digital services tax, I think let me just weigh in a little bit on the previous comment about the cryptocurrencies. I think the critical thing is let's create awareness, and I'm picking from what Ali mentioned about the fact that there's an asset class and there's a currency for transacting, and I think the consumers need to be made aware of the fact that the cryptocurrency is not backed by a central bank. I think there is this belief that a cryptocurrency could be compared to, for example, the Kenya shilling, which is backed by the Central Bank of Kenya, or the US dollar, which is backed by the Federal Reserve of the US, and therefore somebody could be investing in this asset, believing that it has got the same kind of backing as the known fiat currencies. But I think the consumer need to be made aware so that you invest into it knowing that you're taking a risk and it could fluctuate, not backed by any central bank. And if you're taking the risk knowingly, then that's okay. Now, coming back to the question you raised about the digital services tax and what that means, I think one of the things that we need to be aware of the fact that we are trying to promote, digital transactions, digital payments. And one of the critical things about it is the cost. We're trying to see how the cost can be made as affordable as possible. Now, what the digital services tax does is just increasing the cost to the consumer, because at the end of the day, the tax will be loaded onto the cost of transacting, and therefore the consumer will eventually meet that cost. And in order to promote the utilization of the digital transactions for purposes of commerce, I think these are some of the considerations in terms of facilitation or in terms of promoting the movement onto the digital platforms that most governments will actually consider in terms of waiving or trying to support some tax incentives. So you will waive the likes of digital services tax until it has picked up to the point whereby now you can start effectively levying some reasonable levels of tax.
Thank you, Dr. Habilo Laka. Let me cross over to Mr. Ridha. There's a question here. Kindly ask the CEO of the MSME Authority when the authority is likely to release Cycle 5 grants, which MSMEs are waiting on.
Thank you very much. Cycle 5 grants will be released within the coming month because all the processing for the over 12,000 applicants has been done. And we will be commencing that in the coming 2 weeks for the disbursement. Thank you.
Thank you so much for that. Mr. Ali, there's a question here for you. What are some of the more innovative approaches that can be used to enhance and enable access of payment models on the digital platform for MSMEs, Mr. Ali?
I'm sorry, could you repeat that, Julian? I could not get the full question.
The question is, what are some of the more innovative approaches that MSMEs can use to tap into digital payment solutions? I think his...
Yes.
Yeah.
I think, it's all about, the cost is always a concern when it comes to MSMEs. So how do you look for solutions? For example, I give the example of POS machines are perceived to be high cost, right? And QR, Mastercard QR is a great solution which is low in terms of cost and provides you the same level of convenience and obviously benefit and efficiency that you would get perhaps with other form factors. So that is one. Most importantly, since we have all seen that there has been a 400% hike on e-commerce since the advent of COVID, I think we must reach out to our MSMEs, guide them, inform them on the benefits of how having an online store, and that's where Mastercard Simplify solution is absolutely it's the right timing for our clients to take them to the MSMEs, because this small store which you can manage and make your presence felt will be the need of the future. I believe that once the behavior of customers change, yes, even if we go back to pre-COVID or let's say with COVID behind us, those behaviors would only perhaps roll back 10 to 15%. So as the customer behavior changes, they kind of stick with it. Right? So I think we need to prepare the MSMEs for the future. It could be through mobile commerce, it could be through e-commerce, and it definitely has to cover or cater to the physical part, but without the cost, but without the inefficiencies that cash today offers. And the biggest thing that I would request everybody to kind of just search through on their own, even if they don't take our word for it, is cash is super expensive. You have to go to a branch, your travel cost, there is time cost, you forego interest and a good interest rate environment of 9% or so in Kenya, you're foregoing interest. There's the risk of theft. So I think that is what we really need to drive down as an understanding to people, that please do consider digital. Even if there is a cost attached to it, you have to weigh it with a balance, and you have to know that there are costs which are not, they're not marked on your bank statement, they're not marked on your ledger, but those costs exist.
Thank you so much, Mr. Ali. I'm told by my director we have about 5 minutes to go, so let's take all a minute to give our closing remarks. Let me start off with Professor Waris, just about a minute.
Well, I cannot pass up an opportunity to talk about tax. So as far as the direct service tax is concerned, I think unfortunately Kenya once again has used tax as a blunt instrument. It's a very broad based tax. It is going to not only undermine the ability of MSMEs, but is also going to undermine the ability of young students, of unemployed to better themselves, because it taxes books. But I think if there's one thing I would take away from this, is that this has been such an interesting panel of people from both government, private sector, as well as the academic spaces. And I think it would be great to have a collaboration between all of us after this and see what we can do to help from all our different spaces. So thank you very much.
Absolutely, and that's Professor Waris looking to a nexus between the private sector and the university academia. Let's cross over to Mr. Ridha. Your closing thoughts, please.
Thank you, and I pick it from where Professor has left it. We must work together, the private sector, the MSMEs, the academic sector, and everybody else in this space. And the second thing is that to our MSMEs, let us progressively appreciate the opportunity that is there for digital payments. Let us digitize our operations, and it can only be for our good. Thank you.
Thank you, Mr. Ridha. Dr. Habil Olaka?
Yeah, I think mine, I would want to draw back to, there is the FinAccess survey, that shows the level of financial inclusion in the country. And if you look at the progress that the Kenya has made in terms of financial inclusion, is quite, commendable, I would say. Look at 2006 data and the 2019 data, there's quite some significant progress. And this has been essentially been possible because of possibly two things. One is the mobile banking services, and also the agency banking. And therefore, I think the way to improve or continue getting better financial access is through enabling digital financial services to pick up. But also we need to be aware of one thing, that the more we have adoption of the digital financial services, the more we are exposed to the vulnerabilities, especially cybercrime and the like. So it is both the benefit of it, but also we need to be conscious of the fact that there's a cost that we have got to be conscious of.
Thank you so much, Dr. Habil Olaka. Now let's close with the final thoughts from Mr. Ali.
Thank you, Julian, and thank you to the panel. I think it's been a fantastic discussion. Look, if there's one thing COVID has taught us, is that we are all in the same boat. This thing does not differentiate. This thing doesn't look at the disparities. This thing, it has, it's put all of us to make us think that we must come together, we must collaborate together, look at the real problems that are sitting on the table, not try to guard our small castles that perhaps we think are there to stay forever. The only organizations and economies will thrive which have a collaborative, disruptive fintech mindset. And I think that's where we must bring all the key stakeholders together on a table, put real problems in front, get the best of each one of us, and I think solve for real problems which will benefit the people and bring up the economy. Thank you.
Thank you so much, Mr. Ali. Thank you so much, Dr. Habil Olaka. Thank you so much, Henry Ridha and Professor Tia Waris. Clearly, the take-home is collaboration between the private and public sector, as well as academia. And that takes us to the close of our conversation on the NMG Leadership Forum, where we have been looking at digital payments. Don't touch that dial. News is up next.